So today we're talking about a conservative option that you could have in your portfolio. Is this something that you need? That's what we're going to talk about next.
Well, hey, my name's Tommy Neesmith. I'm a financial advisor at Christy Capital Management, and I'm here today with Mel Stubbs, who's also a financial planner. And we want to have a conversation about something that is oftentimes maybe referred to as a dirty word in financial planning. Mel, what is that word? I'm going to let you say the bad word.
We're talking about annuities.
Oh, annuities.
Annuities have a lot of definitions. It's not just one definition. So I'll give a definition, you give a definition.
Sounds good. What's yours?
So one definition is a payment for the rest of your life. If you're a federal employee, some people call your pension like I have an annuity. But a payment for the rest of your life is one definition of an annuity.
That's a good one. Another definition of annuity could be a accumulation bucket of assets that you have that's set aside in a conservative manner that doesn't give you any risk of loss due to stock market exposure. That's another definition of annuity.
And for today's discussion, we're going to be talking about that kind. So not the income for the rest of your life type of an annuity. A lot of the people that we're working with are federal employees. And so when you have a pension, that's an annuity. When you have Social Security and a spouse's Social Security, they don't really need or desire another guaranteed check for the rest of their life. So we're going to look at just the accumulation of a conservative option. That's what we're going to talk about.
Great. When you do hear that word annuity, there are three basic types of annuities. You have a fixed income annuity, you have a fixed index annuity, or you have a variable annuity. And all three have similarities, but they're different. And as Mel said, we're going to talk about a fixed index annuity. And what are some of the pros and cons to that? I'll kind of take the pro on one end. When you talk about a fixed index annuity, you are minimizing or reducing your risk due to market exposure, but yet you still get to participate in the market in the indexes that are inside that particular program. That's one pro, I think. Mel, do you have another?
Yeah, another pro is the no risk of loss due to stock market performance. So there's kind of a floor where, what you have now, the premium you put in, it can't go below that based on the way the stock market performs. So that's a pro.
That's a pro. And so con on the annuity, right? When you think about an annuity, it does have a time limit to it. There is a contract that you as the investor enter into with the insurance company. And so there are 5-year annuities, there are 8-year annuities, 10-year annuities, 14-year annuities. We can keep going on and on. And so with that, there is time that comes into play. And so you need to make sure that that time horizon for you when you need access to all of those assets does come into play when you're talking about an annuity. That is one con.
Yeah, so on that, it's not 100% liquid. You can't get to 100% of your money without paying a penalty. But most of them you can get to 10% of your money. So let's say you have a $100,000 annuity. Next year you can get to at least $10,000 of it to spend if you need. So what's one of the ways to get around that limitation?
So a way to get around that limitation is to have other funds set aside in other investment accounts that are 100% available. Mel, as we talk to clients and prospects throughout the years, it is a bit confusing when the word annuity comes up, especially when you get into this conversation of, I don't want my money tied up for that long. And so making sure that you have assets set aside in other buckets. And we like to talk in that term of buckets. You have a bucket of assets that are 100% available. Maybe it's in a certain tax status like non-qualified or even traditional IRA, those type of funds. And then also having assets set aside in the annuity kind of helps eliminate that risk or that con to where you don't just have one bucket of money. I'm curious, as you talk to people, what do people not like when they hear the word annuity?
Well, some people get confused about when I die, what happens to the money? And so if you are doing one of the income annuities where you've turned on a payment for the rest of your life, you collect that payment for 5 years and then die, there is some gray area about how much your beneficiary may be getting. But in the annuity we're talking about, though, you're not turning on a payment forever. It's just an accumulation bucket. Generally, it's whatever the balance is at time of death, that's what your beneficiary gets. That doesn't have to be a point of concern. Just whatever the accumulation balance is at time of death, that's what your beneficiary gets.
Yeah, I think that's a great point, Mel, as you talk through that, because that is one of the big, I think, misnomers about the annuities that we're talking about. Is, when I pass away, my beneficiary is not going to get X amount of dollars. And so that's a great point you bring up, that it's there. And unfortunately, we've been through that with clients, and we've seen that. We're not just talking about that. We've lived through that with clients who've passed away, and their beneficiaries receive 100% of the balance that's in the account, just like they would in a mutual fund. So there's no difference there as it relates to that. A lot of times too, when I talk to people about the annuity, they confuse it with life insurance. And so for you, have you had that conversation with anyone? And how did you kind of handle that?
Yeah, so life insurance companies, they do two things. They offer life insurance and they offer annuities. But with an annuity, you're putting an amount of money in that you want to be conservative. You're not paying for a death benefit. You're not being charged for those type of things. It's just a conservative bucket of money for your money to grow. That's not in the stock market, but the growth is tied to how certain stock market indexes work. So it's a great option.
It is, and one of the things that I know you and I have talked about before is when you enter into an annuity contract, because that's what it is, a legal binding agreement between you and the insurance company. When you enter into that contract, the contract can be a bit lengthy, right? And that could be a little intimidating at first. And one of the things that we have found, and as we talk through this and work through this over the years, is that contract is really for your benefit. You are the person entering into that agreement, and your advisor has given you the advice, and you have selected the most suitable product for your situation. But you as an individual are entering into that legal contract. So as you see that paperwork come across, right, it don't be that intimidated by it. It's for you just as much as it is for the insurance company. Have you had that conversation with anyone?
I have. And so even though most of the fixed indexed annuities that we are using, we are not using the income rider part of it, where you turn on a payment for forever. But it is an option that's there. And so they have to have all the details written out of, depending on the age you turn on income, all of those details are in there for your protection.
Yeah, that's really good, Mel. Thanks. And as we kind of wrap this segment up and kind of close out the conversation of, is annuity a bad word? Let's remember that in the markets that we have available to us, you have choices. And some choices may not be most suitable for you. That's why it's super important for you to have a fiduciary like ourselves to sit down, talk through those options with you, make sure we're looking at your overall plan, your overall goals, what your risk tolerance level is, and what the purpose is for each bucket of money that we're talking about. And in determining, is the annuity for a portion of your assets a good bucket to have? And as you look across the spectrum of conservative options that are available to you, as you look at bonds, as you look at cash, as you look at the annuity, which one makes sense? Not just from a number standpoint, but also from a suitability standpoint. I think that's huge and key to keep in mind as you are making these decisions about, should I use this annuity as a portion of my assets in my portfolio?
Hopefully that gives you some good information on whether an annuity is right for you. If you need help with this type of stuff, please go to christycapital.com. Call us on the number on your screen. We would love to work with you. Until next time, I'm Mel Stubbs. That's Tommy Neesmith. See ya.
We need to do the proper disclaimers. The purpose of this video is not to give specific tax advice or investment advice. We're going over general principles and ideas that can be used, and if used correctly can save and avoid taxes. You're going to want to work with someone personally who knows your situation personally. So seek out advice from an independent financial advisor. This is for educational purposes only. I hope you enjoyed the video.